The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusible isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusible.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. You find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marks with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, but today he is in sunny, relatively speaking, warm Sioux Falls, South Dakota. Shawn, how you doing, buddy?
5 degrees. 5.
Yeah,
With wind chills.
better.
With wind chills seriously in the minus category.
Yeah, it could be 4, Shawn. So you gotta look at the sunny side, right? Look at the sunny side of life on that one.
I like how you think.
You were telling me when we got started that you had some locals that were saying, man, it's kind of cold out there. So when the locals are telling you that it's kind of cold out there, it's kind of cold out there. So
Well, last night when I left the meeting, I think it was like 9 or 10 o'clock, and you just go out there and just the wind is just oh boy,
good times. Good times.
Whatever cardiovascular problems I had before I went outside, it was cleared up.
That's right. That's right. That's right. That's right. Speaking of weather, you started talking about back in July timeframe that you felt like mid-December into mid-January we're going to start seeing some cold weather move in, and it was going to be a a very intense short blast of cold weather, but feels like you're seeing some of that take place right now. If you look what's happened on the East Coast, you've seen some very big storms come through. You see record snowfall in the Rocky Mountains right now, especially in that central Colorado up north through to the Canadian border. You're seeing some record snowfall there, and then you're also seeing some record snowfall in on the West Coast and the various mountain ranges out there. So I guess as you're looking at your model now, Shawn, are you seeing more intensity than you thought? About the same as what you thought? Any changes in that thing? Like what are you seeing in your model right now?
I really don't see much change at all. I think this cold, there's always going to be some oscillation. We're not going to, keep it as incredibly cold as it is at the moment, but we got a little warm up. But then we're in another cold push here at the end of the month into Christmas time. But I think overall it's going to be, it'll be top 5 cold for the month of December into the first half of January. Over the last 30 years, let's say top 5 of the last 30 years. And the big thing is that the snowfall, which they haven't the last 2 years, the Northeast just hasn't had hasn't had a snowflake. They're going to keep getting considerable amount of snow. The West, we tend to get a lot of snow out West, but I'm saying the Northeast has gotten a lot of snow. Feet of snow in some of the locations up there, and they're going to get more of it. So, remember it was first half winter, back half very, very warm, and then the winter comes back from March into mid-April, causing consternation for trying to get an early start to the planting season and the potential for yet again another year where Russia, Ukraine, and the U.S. could have, some frost risk during the spring. Looks to me like I don't see any change to that. I think it's happening as we thought it would. Like I said, we thought we would start getting some cold weather as we approach the end of November. And that would start this pattern, and we're getting that. And remember, natural gas consumption is much, much greater if the first half of the winter is cold than if the back half of the winter is cold, because December and January are your 2 highest seasonally coldest months of the year. So when you're colder than normal in those 2 months, it's maximum consumption of natural gas. And when the cold is centered in the eastern half, that's where most of the demand is. So even with a warm back half of the winter, getting that first half of the winter consumption of natural gas on the books means that this year is going. The overall demand for natural gas, especially if we have a cold March and April, bringing some extra demand in, we're going to have a much higher demand year than we've had the last 2 years. And remember, our production in the U.S. is down about 5% year over year because the prices are uneconomical, and some of the shale reserves are starting to roll over, meaning we're starting to deplete a lot of these high-performing shale formations that we've been drilling. So all of this is saying to me, and then in addition to that, the longer-term picture is we have all this exponential increase in electrical power needs because of all these data centers that are being built to power artificial intelligence. Yesterday, Meta said they're going to invest $4.5 billion in nuclear to try to supply enough electrical power for their own AI needs. It's a real desperate mad dash to try to see if they can build enough electrical power to keep AI powered up. Elon Musk doesn't think we can do it in the next few years, and most of the new electrical power that's coming online or that can come online is from natural gas generated electrical power. So I really feel there's a good chance we can have an energy crisis, not with crude oil, but with natural gas. Yes. Like we had a few years back, we had $10 natural gas. And it just seems to me that all the nuclear investments, which is great, it'll help in 5 years because it takes time, but it's not going to bring enough online in the next 2 to 3 years to offset what could be a real significant electrical power and natural gas crisis. And when natural gas prices go up, Casey, nitrogen-based fertilizers are not going to stay where they're at. We in our presentations that we talk about, this week. We have a chart up there of the price of natural gas and the price of nitrogen fertilizer and the high correlation between the two. So that to me is this risk suggests to me that anyone. I know fertilizer hasn't quite come down as low as many would like to see, but it might be the best that we get, especially if I'm correct about a more bullish environment for commodities over the next 1 to 2 years, and especially for grain markets. Corn prices go up, grain prices go up. We use more fertilizer. So if you're a producer, I really think that you need to find a way to make sure that you don't let the fertilizer side of the cost of your business get carried away, because it could turn in a hurry here, especially if we develop a natural gas crisis, which I think we're in the early already in Europe. Natural gas is just going parabolic again because of a cold winter over there, and additional issues with Russian natural gas, and we're just not able to ship enough to them. So anyway, definitely a big trend to follow and watch. And if we continue to have winters that are more on the colder side over the next few years, which I believe we're going to see, that just adds insult to injury. So,
yeah, a lot of moving parts there. And then, one thing I want to talk to you about a little bit here, and we can get into a few other things, but I read an interesting article the other day where OPEC was talking about delaying oil outputs. Obviously, the price of oil where it's at now, if they go pump more out there, there's a lot of moving parts there, but typically, when the U.S. has said, "Hey, we're coming back online with our shale oil drilling, we're going to go back on with line with our fracking and those kind of things, and we're going to start producing a lot more of our own oil," OPEC nations have tended to be like, "Okay, cool, we'll just flood the market and then make it be a little bit more difficult for your operations to make money." When I read that, I found that a little bit interesting, Shawn. Just would like your reaction to that. Just watching past moves. I mean, what's your thought there, I guess?
Well, first of all, we've been in this $70 to $80 range, Casey, for a while now. Mm-hmm. And whatever Trump wants or doesn't want, I don't believe the energy companies are going to drill any more than they're already drilling. And they're really not growing production that much. I mean, the production is starting to flatten out, meaning, once again, these shale deposits are starting to roll over. They're starting to deplete. I think that these energy companies are trying to be more rational about maximizing return on investment instead of just, blindly, trying to increase production at all costs. And so when I think, when you look at all of that, and Trump has made it very clear he wants to refill the Strategic Petroleum Reserve, which is a lot of extra demand that isn't in the market right now. I don't think we're going to see a boom in crude oil production domestically like we saw the last time. I don't really think that's going to happen. I don't think it can happen. And so I think ultimately what might be happening here is Trump might be, Trump's talking to everybody already, even though he's not president, he's talking to everybody. My guess is he's probably talking and saying, look, you don't want $50 barrel oil. We need to fill our Strategic Petroleum Reserve. You want to make more money. You want to produce more production. Give me a little bit of time. Let me get in. Let me get my generals situated, and let's cut a deal where you can raise production. We'll buy that extra oil to fill up our petroleum reserve. We'll keep prices around where they're at, which works for you, and it's fine for us. And then we get what we want, which is to fill our petroleum reserve. You get what you want, which is more income. We can be friends. And if anything happens in the Middle East that needs our undivided attention, we can work together to solve it. I mean, in my mind, I'm just feeling that conversation's happening with them, and that might be why they're delaying things, and just makes sense to me, because if we're gonna have to buy hundreds of millions of barrels of oil to fill this petroleum reserve over the next couple of years that we sold, I don't think we're going to drive. We want to drive the market up to 100 to do it. I think we want to be able to buy it right here, and the way we could do that is if they raise production when we're ready.
Right. Right. Yeah. That makes a lot of sense. When you look at what's going on kind of with the dollar and those kind of things. The Fed came out and they're going to have their December meeting here coming up. I don't know. It's hard to read this last one. Reading between the lines a little bit here. It kind of felt like maybe they were going to slow down a little bit. It was kind of maybe the hint, but there's also the layer in there that, it's not off the table either. So the rate hikes are, it's always easier to put weight on than it is to take it off. And I think that's where we're at right now with with interest rates. But if you're looking at where you see things moving right now, what's in your best estimate, what's your guess what the Fed's going to do? And then how do you think that's going to affect the dollar as we move into where the dollar's at now, then compared to what might happen, post meeting results?
Well, I think he's trying to calibrate what Trump really wants. Trump said he wanted a weak dollar, then he wants a strong dollar, then he wants a weak dollar, but he wants a strong dollar. Well, what does he want? Right? And of course, the dollar's had a big surge like it did last time he became president. The ruble is crashing. The real is crashing, not helping, by the way, grain markets when you have the ruble and the real crashing simultaneously because of a strong dollar, because of Trump's perceived policies. So they're kind of dancing a very fine line. They're not really sure what he wants. He has a year to make Trump happy about what he and the Fed are doing. So they keep their independence, quote, independence, and then they keep their jobs. So I think right now, what his speech or his talk this week, his comments this week, what he's essentially saying is, we're going to just slow down a little bit and feel where things are at and wait for Trump to get in and see where he's really at once he gets his generals in, his cabinet in, and go from there. I do think they will lower rates in this meeting 0.25%. I think they've already said they were going to do it. I don't think there's any harm in doing it. I don't think Trump has any problem with them doing it. But I think they're warning everyone that they're not as certain about policy after this December meeting, given the uncertainty over exactly what the Trump policies are going to be, what exactly he's going to do, and what exactly he's actually looking for. At the same time, we don't want to destroy the global economy by having, when currencies crash, that's when economies crash in those countries because your purchasing power gets destroyed and nobody can afford anything. So at the same time, they got to be very careful. They don't want to be too hawkish either, because if they say they're not going to raise rates lower rates anymore, then the dollar goes even higher, and then it makes our partners even more under pressure, and then it hurts our economy. So it's a really interesting, delicate bobbing and weaving that I see right now, Casey. All I can say is we went from absolute certainty of rate cuts to not so sure after this one. That's where I think we're at right now.
Okay, right on. All right. Let's talk about one thing real quick, and I want your feedback on this. So the Chinese and the Canadians are still going back and forth about the canola thing. You've seen some stuff there. Get your thoughts on that. But I think what I really want to have you spend some time on is where you think the cattle market is. Just as soon as you think the cattle market's going to slide off the table, it comes right back. So I guess as you're looking at what's going on in the cattle market, what are your thoughts there? And then we can get to the canola thing after that.
We've been trading in a sideways trading wedge pattern since last fall. It's been a year, and so we have this wedge, and it keeps, the volatility keeps narrowing. It's a coiled spring pattern. That wedge pattern completes in January, and when you get to an end of a wedge, when you get to an end of this kind of a coiled spring pattern, it will break up or down. And when it does, it moves very rapidly in the direction of the breakout. It doesn't tell you which way it's going to break out. That's where you, me, have to come in and try to decide which way it's going to go. My feeling is it's going to break out to the upside. And we're going to get one more final push in the cattle price in the first half of 2025 before we place what I think is going to be a very enduring, important top in the market. I could be wrong about that, but that's the way it looks to be like we're going to break out. And the reason I say that is because there is evidence that's starting to show up. And even JBS made comments to that point that they're starting to see early stages of retention of animals and some herd rebuilding in parts of the U.S. Straight from JBS's last conference call. I would think they would know best what's going on in the country land than anybody else. And we know that historically, in the year that herd rebuilding begins is when the price tends to make its final high. And so I think watch the April feeders and watch the April live cattle market. Both of them have these same wedge patterns, and watch for a breakout through the upper end of the wedge pattern. If we get that, Casey, then that'll be your signal that we're going to get this final impulsive move to the upside to new all-time highs from what we set back last fall. And then it's up to the producer to try to lock in and preserve that economic value as much as they can. It doesn't mean crash and burn. We're going back to 80 cents a pound. It doesn't mean it's all over. It just means that's going to be the high price for a considerable period of time from all the things that I'm looking at going forward. That would be where I think that's where I'd be looking at. And so I'm optimistic on cattle prices into 25. But I do believe we'll look back and say, that was a really like 2014, where that printed a high for an extended period of time. I think that's what we're set up for here in 2015 is something along those lines. So, and the good news is, we don't have to wait too long for this pattern to reveal itself. In another 30 days, we're going to find out which way this market's going to break. And if I'm correct, be ready for your strategy of how you're going to handle it. Are you going to use LRP, which is a government subsidized program for laying protection under the market? Are you going to make cash sales? What are you going to do? Have a strategy, put it together, get ready. It's going to come fast and furious if it does. If we break down, then act fast and furious. I mean, it's one or the other. Either way, very quick, fast action is going to be required in the first half of the year, depending on which way it breaks. My best guess, looking at everything that I'm looking at, it will break out to the upside.
Right on. Okay. Any thoughts on the canola thing up in Canada?
I guess I shouldn't swear in your show, but it's fine. It's a shit show. I do it all the time. It's a shit show. I mean, they have to. The Chinese have to buy the canola. They need the canola. They want the canola. Canada is the largest exporter of canola. They're the biggest buyer of canola. I mean, so it's just like kindergarten. Can we just please make up? Can we stop the he hit me, I hit They just have to settle this. Just settle it. Just figure it out. Trudeau did some stupid things because he's Trudeau. I'm not, and if those that like Trudeau, and if I upset you, I'm very, very sorry. But he agitated the 600-pound gorilla by imposing tariffs on China on things, and this is their way to retaliate. So you just need to stop that. Stop it. Just come to an agreement. We made a mistake. We're very, very sorry. We'll pare back some of these tariffs and let's come to an agreement. And I believe that will happen. Now it may take, it may have to go through this political convoluted 3 to 6 month period to get it all resolved. But I still believe the Chinese will buy when the market corrects. Even while they're negotiating, they'll still buy when they're getting its goods. So we had an initial crash, right? And they bought a lot, and then it took off, and they stopped. Now it's crashing again. I've been almost positive they'll go in and buy the market again. So in some ways, it's almost like with what they're doing, they're almost being able to dictate when they buy canola at the price they want, and they can buy a lot of it because they scare the hell out of the market by telling them they're not going to buy it. It's just one of those things that eventually will resolve itself. My view on the trading of canola is look at the price chart, look at the support level that we hit when this first came out that held. look for the resistance that we hit that topped, draw 2 lines. And I think that's the trading range we're going to be in for the foreseeable future until this gets resolved. Meaning, if you're a canola farmer, you want to sell when we get up here. And if you're somebody that needs canola, you want to buy when we're down here. When we got up here, we made a recommendation for farmers to cash sell. I think it was up in that 630, 640 area on the March canola contract, and now we're coming back down here. To me, that's your strategy right now. And until this gets resolved, apparently, it may take until the summer to get resolved, which means this is what's going to happen. Back and forth, headline risk, unless something comes along sooner that changes the complexion of the market. But that's what I'd be doing. If you need to sell canola, if you're needing to raise some cash, if you got too much in storage on the farm and you're looking for what's your strategy to move it out, you just got a great opportunity to cash sell. And now it's gone. Well, and every time we get another one of those opportunities, take another shot at bringing some money home on the farm. That's my strategy, and that's my recommendation to those growing canola up in Canada. So,
right on. Okay. There's always something geopolitical going on that drives the market in there. Seems like it's always.
Yeah, we're just in a heightened geopolitical environment right now. The 53.5 geopolitical cycle, Casey, that we talked about at your conference. It peaks in 2026 to 2028. So all these things, these disagreements, these skirmishes, these conflicts amongst trading, it's going to continue to be a very significant driver of market volatility in good and bad, and you have to accept it. There's nothing you can do about it, and it's going to provide you opportunities to sell and to buy, and you have to be very, very clear, unemotional, objective about those things and take advantage of them when they come. Like I said, we just had a great opportunity in canola that's come and went. If you missed it, don't miss the next one. That's all I can say.
Right on. Okay. Shawn, good stuff as usual. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial and find out where you're speaking at next. What's the best way to people do that?
Website is Hackett, Hackett advisors.com. We also have a Twitter page at Faradex11. We have a LinkedIn page. We are not social media influencers. We don't spend all our day posting on these things. From time to time, however, we will post some interesting information, some interviews that we do to give people some ideas of our outlook and how we use cycles, statistics, and correlations to make these forecasts so that those listening and watching your show can extract some value. So,
yep. I've seen you on your private jet posting, Shawn, about the latest in men's footwear. I've seen that, so don't.
Yeah, I'm the seat in the back that doesn't that the seat won't go down because it's pressed against the wall. That's the seat I get.
That's you, right? Okay.
So you're like this the whole time, and you can't move.
I've been in that seat. It's not a fun one.
It's not when I get. I'm like, oh no, this is gonna be a long one.
Yep. Well, Shawn, I appreciate you being the podcast, man. We'll catch up with you next week, and we'll go from there.
Sounds good, Casey. Look forward to it.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me on Facebook, Twitter, and Instagram at Moving Iron LLC. Check me out on Instagram, Moving Iron Podcast. Go to the YouTube version of the podcast at Moving Iron Podcast, and you can go to TikTok at Moving Iron Podcast as well. Also go to movingironllc.com for everything Moving Iron related. So with that, I am Casey Seymour with Shawn Hackett. Let's move some iron, folks. Out. The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusible isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusible.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Move